Yeah. Hey everyone. So I just wanted to show us something here. Um this trade on gold yesterday. So the market is actually closed today and I was so busy yesterday that I couldn't close. So if not, I would most likely have just gotten out from this point. But now since the market is closed already. So so yes, I actually posted this entry on X yesterday and on the Telegram channel. So so we can see where I entered from this fair value gap here. 15 minute fair value gap. That's this one here. Yeah. And then yeah, so the first entry actually took me out. The reason is because my stop loss initially, I think I left it around somewhere here. So we can see the drawdown that price did. So after tagging the fair value gap, it's rallied to the upside, then it came back down, and then yeah. So but we can see that it didn't take out this last. So my initial stop loss was at, I think, somewhere around here. So it's my first entry took me out. Then seeing coming back to it. So then I took another entry and then I placed my stop loss at this level here. This level here. Okay. So at this level here. Okay, let's go to MT5 so that I can show us. So this is it. So we can see it on MT5. It actually came very close. Actually came very close to it. So we can see the entry. The entry at this fair value gap, and then so so let's go back to trading view. Yeah, so and then prior to today we had quite a massive move to the downside from gold. Okay, let's come to a daily chart so we can see it. Yeah, so that was before, that's this yesterday's daily candle. So the moment this daily candle, that's this one now. So we can see how the moment it took out the daily the previous day candle, and then it sold, and then it sold. So we had this initial draw on liquidity, that's this fair value gap, which is also known as an inefficiency. The price drew into, and then so we can see it drew into it, and it's even also covered the wick of this candle, of the candle. So when we come down to the 15 minutes, so this high here, we know there are a lot of orders at that point. So that's going to be a very important level because we have much level at this point here as this high. Let me name that as our buy side liquidity. So buy side liquidity. Okay. So and from here again we have this break of structure as this liquidity taken out, and then also this one taken out also. So that's indicating that okay, we're going to start having some shift to the upside. And then we also had this same price movement here. Price, we see price taking out both sell side and buy side liquidity. Yeah. So and then the shift to the upside. So order block created. So now, sorry, I'm coming. So during the London section open, so we see price rally back down and then come into this order block area. So that was after the London section open. Yeah. So all this now was after the London section and then inside the order block. So we can also see price movements. Let me map this out so that we can go to a lower time frame and then we really see the behind the scenes of what was going on here. So let me differentiate the color. So when we come down to, let's say, 5 minutes first. Now we can see what's happening here. So this bearish candle dipped into the order block, and then we can see price shifted to the upside, creating a fair value gap. And then we can see from that fair value gap, price pushed to the upside. Let me come down to a lower time frame to see if it's going to be somewhat clearer. Now, so we can see here short-term liquidity taken out, and then we see um like a shift to the upside. So we can see how price indicating to us that it's about to go to the upside. So if we even come down to a 1 minute chart, so we can see price movement. All right, so let's come back to the 15 minutes. So we notice something here. Most of the times when price is about to go bullish, Yeah, so most especially if price, um like let's say price has swept liquidity and it's about to go bullish, and then price does a change of state of delivery and then begins to go bullish, and then let's say more than one PDRA forms from that place. Like here now we have both fair value gap and order block. So let's say now price tax the order block. Now notice what happened here. This line now is indicating the New York session. So notice the moment the New York session opened, price came back down again and took out liquidity. So it used this our initial entry that's that we entered from the fair value gap as a liquidity and then tapped the order block. That's this last bearish candle here. This last bearish candle. So we can see. So there are days whereby the trade your trade doesn't have to go smooth every single time. There are days whereby just like this one now, you might need to be able to bear through the drawdown. And you know, if you panic in this situation now, you'll be scared that it's going to hit stop loss, and then you now come out of the trade, and then it will now end up reversing and going to the direction. So there are some days you just need to be able to sit through this kind of drawdown and just trust. And besides, that's the reason why your stop loss is there. That's the work of the stop loss. The stop loss is there to protect you so that you don't lose more than what you have already decided or agreed to lose. So back to what we were saying. So yes, so it happens like this sometimes. So we can see that immediately after the New York session, price came back down again, and then this time around um came into the order block, and then before it starts rallying to the upside. Now the reason why I'm saying is this because sometimes we might be in a hurry to want to shift our stop loss, or maybe when we see price has moved away from our entry to a certain extent, we want to shift our stop loss. And most especially if the trade is going to last through both the London and then also to the New York session, because price is always seeking liquidity. So as soon as the section open, once the volume is about to step in, they would like to take out liquidity, and once it takes out liquidity, then it begins to move. That's what the power of trade, that's the manipulation, accumulation and distribution is all about. So in this case now, just imagine now we shifted our stop loss maybe to our entry, and then the London section will open, and then it will now take us out, you get. So sometimes it happens like that. So the entry in the London section, it will use it as a liquidity and then balance into another PDR that is below it, and then before it will now rally to where it wants to go to. So yes, that's it for this. So we see after the section, and then we see price just rally. Let's go to a lower time frame and let's see the behind the scenes of what took place here. Yeah, so we can see the change of states of delivery. This short-term liquidity taken out, and then we have a shift. We have a shift to the upside. So Yes. So and then we have this move to the upside. So my target is actually this buy side liquidity. But most of the times I don't like leaving trades over the weekend. But because I was busy yesterday, so that's why I couldn't close, and then now the market has closed again. So we just have to wait till the market opens for the week again. So if not, I would have closed at this point. Yeah, so yeah, but I believe this buy side liquidity is still acting as a strong draw, as a strong draw. Like I see no reason why it shouldn't. You get. But like we all know, the market can still do anything. So now at this point now, I think it would have been safe for us to shift. Maybe you can shift our stop loss to the entry, or maybe this break, this high that was broken here, this high that was broken here. You can even see it. This high that was broken here. So we can see that this candle came back down, and then the wick of the candle, like we already established before, that the wicks of the candle, or as ICT has taught us, that the wicks of the candle are permitted to do the damage. So we can see that this bearish candle, the wick came down into this larger order block here, and then we can see that the body of the candle close above. So all these are indicators to show that price is still willing to go to the upside. So that's just it. So now we just have to wait for the week, for market to open for the week again. For the week again. So yeah. So all right, that's it. And thank you.